Hey there. So if you've been keeping an eye on the news about electric cars, you've probably seen some seriously confusing headlines, right? One day it's all about slowing sales, and the next it's a story about some revolutionary new battery. So what is really going on? Well, let's get into it. I think the big question on everyone's mind is pretty simple. After years of just unbelievable explosive growth, is the whole EV revolution finally stalling out? And you know what? It's a fair question, especially as all that early excitement starts to meet the cold, hard reality of the mass market.
But here's the thing. What we're actually seeing isn't a stall at all. It's a massive shift. We're moving into what a lot of analysts are calling the second wave of electrification. The early hype cycle? That's over. Now it's all about the nitty-gritty, cold, hard economics, manufacturing efficiency, and frankly, some absolutely fierce global competition. And this is where it gets really interesting.
Now, like any huge industrial transition, this second wave is coming with some pretty serious growing pains. So let's break down the new reality that the market is navigating right this second.
First off, the global market has basically split in two. Over in China, EVs have really hit the mainstream, making up a staggering 42% of all new car sales. But meanwhile, here in the US and Europe, that explosive growth has cooled off to a more stable 16% rate, mostly thanks to headwinds like high interest rates.
And you can feel that slowdown in a single pretty telling number. Right now in the US, the average electric vehicle sits on a dealer's lot for 92 days. That is a crystal clear signal that production has gotten just a little bit ahead of demand, at least at today's prices. So let's quickly unpack these headwinds. For starters, high interest rates have made financing the average EV a whopping 22% more expensive than it was just a couple of years ago. At the same time, governments in places like Germany and the UK are pulling back on those juicy subsidies. And forget range anxiety. The new problem is charger anxiety. The data shows that more than 1 out of every 5 charging attempts at a non-Tesla public station fails. That's a real problem.
Okay, but while the market is dealing with all these challenges, there is an absolutely incredible revolution happening under the hood. And it's on track to solve the single biggest problem of all, that initial price tag. It all starts with a battery. You see, for years, EV batteries were all about one thing, cramming in the most possible range using expensive materials like nickel and cobalt. But the new king of the hill is LFP, lithium iron phosphate. It might have a little less energy density, but it's way cheaper, it's significantly safer, it lasts for thousands more charge cycles, and, this is crucial, it completely avoids the crazy price swings and complicated supply chain of cobalt. In this chart just shows the takeover in action. I mean, just look at this. LFP chemistry now powers 58% of all new EVs. That is a massive jump in just a few short years. It's become the go-to choice for standard range cars, and that's bringing costs down for everybody. But what if you could get rid of the expensive lithium too? Well, a new challenger is officially here: sodium-ion batteries. They use abundant, super cheap sodium. Yep, the same stuff that's in table salt. These charts break down a battery's cost, and that positive electrode, the cathode, is always the priciest part. Look on the right. For a sodium-ion battery, the cost of that critical material is less than half what it is for a lithium-ion battery. That's a game changer. And the performance? It's surprisingly strong. Now, its energy density isn't quite at lithium-ion levels yet, but just look at that cold weather performance. It holds on to over 92% of its capacity at minus 20 degrees Celsius. It absolutely crushes lithium-ion on that front. For anyone living in a cold climate, you know this is a huge deal. And believe it or not, the holy grail is just on the horizon. Solid-state batteries, which are even safer and way more energy dense, are finally moving out of the lab and into real-world prototypes. We are talking about potential ranges of up to 1,500 kilometers on a single charge. The innovation isn't slowing down one bit. It's actually speeding up. So all of this incredible tech change is completely redrawing the map of the global auto industry. It's creating a new world order, and it's happening faster than pretty much anyone predicted.
And nothing captures this shift better than this single sentence. For the first time ever, China's BYD has sold more pure battery electric vehicles around the world than Tesla. The race for the #1 spot? It's officially a two-horse race now.
And you can see this new diversity playing out across all the different parts of the market. Yeah, Tesla is still crushing it with the Model 3 and Model Y, but the competition is now winning in other key areas. In the super important city car segment, the leader is now a Chinese brand, Leapmotor. And in Europe, Skoda is having a massive hit with its Elrock compact SUV.
But honestly, this might be the most important chart for understanding the new world order. The EV native companies like Tesla and BYD, the ones who control their own batteries and software from top to bottom, are pulling in healthy 18 to 22% profit margins. Meanwhile, many of the big legacy automakers, they're still losing thousands of dollars on every single EV they sell.
And while growth is cooling off in the West, the next EV explosion is already happening in the global South. Markets like India, Thailand, Indonesia, and Brazil, that's the new frontier, and it's all being driven by affordable models and a huge demand for electric 2- and 3-wheelers.
Okay, so those are the massive global trends. But what does this second wave of electrification actually mean for you, for your wallet, and for the next car you might end up buying? The entire equation for what it costs to own a car is changing right before our eyes. With crude oil over $100 a barrel, gasoline is just painfully expensive. At the same time, those cheaper LFP batteries are pushing EV sticker prices down, with analysts predicting we'll hit price parity with gas cars here in the US by 2027. What this all means is that the biggest financial win now goes to people who can charge their cars at home, where electricity is cheap.
And get this, your car is about to become more than just a way to get around. With this new vehicle-to-grid or V2G technology, your EV can charge up overnight when power is cheap, and then sell a little bit of that energy back to the grid during those expensive peak hours. Yeah, your car could soon be an asset that actually earns you money while it's just sitting in your driveway.
So, no, the EV boom is definitely not over. It's just growing up. The second wave is here, and it's transforming this from a niche technology into a true global industrial force. It's a tougher, more complex, and ultimately a much more interesting market. The question is no longer if mass adoption is going to happen, but how we all navigate what comes next.
Thanks so much for joining us to break all this down. We really hope this was a clear and helpful look at the future of how we all get around.